And then the other concern is while inflation might have topped out, prices have remained higher. They've come down a little bit in certain sections, mainly in vehicles and a little bit in home prices, but they are still expensive and that is weighing on the consumer. So of course, let's give some actionable advice here. Of course, not financial advice, but if you do think it's going to be a hard landing, now is probably the time to get out. We're going to see those cuts, usually during the first 6 months of cuts. That's when you see some of the best returns. So you could try to ride this a little bit longer, but realistically, any of the gains that you see over that time period are likely to come in, especially if we get into a recessionary environment. And it's also a good time to lock in those high interest rates on those fixed income tools. 5% is a healthy return, and that is just about what you can get right now on the short end of the yield curve. And then, of course, stay diversified. You can get into those small caps right now, which are historically undervalued relative to the rest of the market. And that's probably why they've been outperforming so aggressively.